2025 is around the corner and everyone's gonna have one thing on their list, and if you don't, you should. It's about buying real estate in 2025. In this video, I wanna share with you some of my thoughts around where I think the market's headed in 2025, as well as go through some economists' views around where they think the market's heading, which markets are gonna go up, which markets are gonna go down, so you can make the maximum amount of money. If you guys are interested in what my thoughts are, definitely keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, personal development, and all things financial freedom. Before I get into the crux of this video, I need to give you guys a massive thank you and shout out because I just released my book on Amazon and it's available for pre-order, but what's crazier is that within 24 hours, Retire Filthy Rich with Real Estate has become the #1 bestseller across Amazon, across not just real estate investment, real estate mortgages, real estate buying and selling, and a couple of other categories which include personal finance, business and economics, as well as self-help. It is absolutely incredible and I thank you guys so much for the support. If you're interested in getting the pre-order discount, it's still available. So I'm gonna leave a link in the description box below so you can go and order that today. I'm so excited to be able to share that book with you, everything that I've learned, everything that I think is gonna help you grow and scale up your own portfolio. When I'm talking to my publisher with the results that we've seen within 24 hours, they said they haven't seen this happen anywhere before. We're in uncharted territory and that's simply because of you and your support. So thank you so much. And with that, let's dive into the video. So here are the 8 must-know trends for Australian property in 2025. Where could prices be headed in 2025? A massive shift is underway across Australia's sizzling property market with data throwing up 8 key real estate trends to watch in 2025. As we go through this video, I'm going to share with you my thoughts and opinions because I am on the ground floor. I'm actively buying property for myself, but also for clients. The Property Outlook Report 2025 has released, naming 8 key areas to watch across 2025 in both residential and commercial property. Here we've got the chief economist Nerita Conisbee, and I actually did a full deep dive podcast with her on the More Than Money podcast, so definitely go check it out. I'm gonna leave a card that pops up here, so you should go and subscribe because I've got some really cool guests lined up for 2025. Rate cuts in 2025. Report co-author Ray White, chief economist Nerita Conisbee said, financial markets think the Reserve Bank of Australia will cut interest rates twice in the second half of the year. But she said that prediction could change depending on how inflation and the economy play out. The most important is inflation. While it's now back within the RBA's target range, there are risks it could rise again. One big unknown is what happens in the United States. With Donald Trump winning the presidential election, this will boost government spending and put high taxes on Chinese goods. This could push prices worldwide, including Australia, making it harder for the RBA to cut rates. What's interesting is that we are already seeing rates being cut across the globe. And we can see that in many parts of the world, including Switzerland, Sweden, Canada, Eurozone, UK, New Zealand, and the US. Australia is still leveled out. I think we've paused for about 13 months in a row, and we don't have our next meeting till Feb. Now, what's interesting about Feb is that despite the RBA holding and the latest data coming out, CBA was asked to revise, when they thought rates were going to be cut. And they initially said, yes, it's going to be Feb 25. All the other banks are pretty much saying anywhere between May and September next year. But then CBA came out and said, no, we're going to double down and say it is Feb 2025. Now, what does that actually mean and does it hold any weighing? Well, they are the largest bank here. They have a lot of mortgages on their books. So they probably hold a little bit of weight. But when it comes to predictions, everyone is pretty much wrong at this point. It could play out in Q2 or Q3 of next year. And where I think the biggest issue is that with these predictions and the banks coming out and saying, no, you've just got to hold on a little bit longer because X, Y, and Z will cut, and then it doesn't cut. And I think in 2024, I, along with many others, believe that rates would have cut by now. And given that they haven't, means that there's so many people now really struggling. They're holding on. We all believed that the mortgage cliff was going to be worse than it actually has played out. And I think to a certain extent, it's just people barely holding on. Now, in saying that, I still think demand is outstripping supply. We don't have enough properties and we have too much demand. So if you're someone that is struggling, you may be in a position where you're saying, I could offload a property and still be in profit, most likely, and I could get it off my books and have no stress. But I suspect that a lot of people are holding on because they think rate cuts are coming, and in their minds, they're thinking, well, that means prices should go up. What's really interesting is the latest data that dropped, which showed in the last month, Sydney is going down. Sydney's going down a lot faster than people expected. We already know the Melbourne and Victorian markets are slowing down. However, they are starting to bottom out. In my opinion, they could have a good time in 2025. Ms. Conisbee said the health of the economy would also be crucial for any rate cut movements. If people start spending less in shops, house prices fall significantly, or unemployment begins to rise, the RBA might need to cut rates sooner than planned. They'll be watching these signs closely throughout the year. She said there will be rate cuts in 2025, but their timing and size will depend on how inflation behaves, what happens to the global economy, and how the Aussie economy holds up across 2025. And that's very important to note. Inflation is definitely the key area the RBA is keeping an eye on, but it's not the only thing. And we already know from the private and retail sectors, things are slowing down. We have a per capita recession and we're just barely holding on. But what we haven't really seen is the unemployment really start peaking. Now, one could argue the way that they actually calculate these things is incentivizing whatever decision they want to make. I suspect that that number is a lot higher, but in saying that, we also know that the inflation number is probably not the right one either. House price rises to continue, but slowing. Ms. Conisbee said there are signs of the Australian housing market cooling in 2025, but the picture varied across the country, with Perth, southeast Queensland and Adelaide still strong, and Sydney and Melbourne slowing considerably and almost flat. This pattern is likely to continue in early 25, driven by several factors. More homeowners are feeling the strain of high mortgage repayments, and we're seeing an increase in property listings as some decide to sell. The higher supply of homes for sale could put downward pressure on prices in some areas. But she said strong population growth, high building costs, and high expectations of rate cuts in 25 should prevent any significant drops in house prices. I think when it comes to house prices dropping or increasing, I don't see a situation where we see an increase of prices by 15, 20, 25% like we did see during the pandemic. And I also don't see so much volatility on the downside either. So if we don't have rate cuts or we have something really collapse in this economy, I don't think prices will fall by 20 or 25%. We might have some smaller corrections like 5%, potentially 7% in some markets, within markets. When it comes to the affordable market, that is the market everyone's got their eyes on. Number 3 is a shakeup in luxury markets. Ray White senior data analyst Adam Go Tian expects shifts across Australia's premium property markets that is the top 5% of the market in each region. The pecking order of Australia's premium property markets is experiencing its most dramatic realignment in years. He said, with traditional hierarchies being challenged and new players climbing to the fore. Now, this is the luxury home price growth in each major city from the last 5 years. What we can see is in Sydney, it's gone from 2.9 million all the way up to 4 million. Gold Coast has gone from 1.4 to 2.5. Melbourne has pretty much stayed the same at 2.1 up to 2.5. Sunshine Coast has gone from 1.3 to 2.3. Then you've seen Brisbane, Perth, Canberra, Adelaide all starting to record really high growth. And when you see it in the 5-year growth, you've got Sydney at almost 26%, Gold Coast at 50%, Melbourne over the last 5 years has only grown by 9.8%, but then you've got Sunshine Coast, Brisbane, Perth, as well as Adelaide all recording around 50% growth, which annualizes at about 10% a year. Number 4 is the emergence of the golden arc. Mr. Tian said the property restructuring is seeing the creation of a golden arc, stretching from the Gold Coast to Brisbane to the Sunshine Coast, which will emerge stronger in 2025, all three having overtaken Melbourne in the last 2 years. The Gold Coast and Sunshine Coast have established themselves as Australia's second and third most expensive housing markets, with remarkably similar geometric mean house prices at 1.18 and 1.14 million respectively. Both regions have also witnessed an identical 76% increase in prices over the last 5 years. Brisbane, while still more affordable at a geometric mean house price of $996,000, is also showing signs of joining its coastal counterparts to complete the golden arc. The city has the second highest 5-year growth rate of 83.5%, trailing only Adelaide. Number 5 is regional Australia's $1 million club. Mr. Tian said the $1 million club was set to rise significantly across regional Australia, having already gone from just 2 areas 5 years ago to 20 locations in 2024, with 4 more on track to hit in 2025 and a further 7 serious contenders for 7 figures mediums throughout the year. The Sunshine Coast hinterland, currently at 972,000, is projected to reach 1.05 million, supported by an impressive 8% average annual growth rate over the past decade. And I'm going to pause here because this area is a regional area, and it's very important to understand that for the last 4.5 years while I've been on YouTube, everyone previous to that was saying regional areas don't grow, they're not blue chip areas, you need to go for metro cities. That was the old way of investing. What you need is to pivot your strategy and know what markets to get into at the right time. affordability was always going to be a concern as you start getting higher and higher in prices. When you see prices grow at the rate they have relative to wage growth, you're going to understand there's going to be a strain on affordability. And that's why I had said and identified early that you need to look at smaller capital cities and regional hubs. And that's why you see something like Sunshine Coast go from 500, 600K all the way up to 900K and past $1 million most likely. And I would go on to say that that area has outperformed many parts of somewhere like Sydney, which has always been deemed to be a blue chip city and you can buy anywhere, set, forget, and it's great. That's why you need to dig a little deeper when it comes to data. And we're not even considering units at this point. We're just talking about houses, which are supposed to be blue chip anyway. You've got a couple other areas like Gold Coast, Newcastle in regional New South Wales hovering around that $1 million mark, and 7% growth rates in Lake Macquarie East completes the emerging group. Now, I don't focus as much around commercial property, but if you guys want a video around commercial property and a deep dive around it, let me know in the comments down below saying commercial with Ravi and I'll make that video. But it suggests here retail is set to lead commercial property performance in 2025. I don't know about that given how dire the situation is in the retail sector. But number 7 says the death of the secondary office market, and I definitely agree here. Prime markets, however, will continue to thrive. Vacancies will move downward from a current 13.7% to 5.4% by late 2029. This is what you've got to understand is somewhere like Parramatta in Sydney, which was deemed to be the second CBD in Sydney, had so many apartments come up, but they also had a lot of office space. And in that area, I think vacancy rates are closer to 50%, which means every 1 in 2 office buildings are completely empty. And that's going to put downward pressure on your cash flow, which is why most people get into commercial in the first place. Now, is commercial offices the best commercial asset to invest in? That was a real tongue twister. I don't think so, but that's why, again, if you're getting into residential or you're getting into commercial, you need to look beyond just, hey, it's a good idea to buy because someone said commercial was going to go up, or someone said residential markets across all of Sydney were going to go up. And that's how people get wrecked. And finally, we've got private investors to prop up the commercial market for another year. Mr. Radar also expects a dynamic shift via private investors across commercial property in 2025, with anticipated interest rate reductions expected to reignite transaction activity across all sectors. Now, SQM Research has come out with another report, which they come out with every single year, and it's led by Louis Christopher. And I did another property podcast with him on More Than Money podcast, and I'm going to leave a card up here. As you can start joining the dots here, I have some really cool guests who offer really good insights, and we're getting them on the podcast so we can bring you more value. So definitely go ahead and subscribe to that channel, whether it's on YouTube or Spotify, it doesn't matter, just go and subscribe. Now, SQM Research has released Christopher's Housing Boom and Bust Report 2025, which predicts housing market movements for the year ahead. When factoring in a range of separate economic outcomes, in the most likely or base case scenario, which would see a 25 to 50 basis point rate cut midway through next year, and population growth of 500,000 plus, property values would rise 1 to 4% as long as there were no new inflationary outbreak events. Perth would lead the market with growth of 14 to 19%, absolutely wild, while Brisbane at 9 to 14% and Adelaide at 8 to 13%. I have been saying over the last 6 months, when we've been talking to clients as well as the videos that I make on this channel, I've been saying, look, Perth is most likely going to have the most momentum over the next 12-month period. But you've got to also understand that if you're going to buy in those markets, you have to be comfortable with the downside risk that could present itself. Now, I'm not saying markets like Perth are going to go down simply because they've gone up by a lot, but usually you have panic sellers as well. People buy with emotion and really they should be buying with logic, and that hasn't really been the case in most markets. I'm going to still put it out there that Perth over the next 12 months will most likely be one of the best markets to be in. I'm not saying invest in, I'm saying be in. So I'm saying if you've got property there, you're loving life, and you might be in a situation where your equity rises a lot quicker, and I would be opting to take out some of that equity and be looking at diversifying into a different market. Sydney and Melbourne would both see a downturn with prices going backwards as much as 5%, which is pretty much what I think is the worst case scenario here. Now, although I have much respect for the economists out there and the people I've just mentioned because I've met them, I've spoken to them, and they're really smart individuals, you've got to take every prediction with a grain of salt. I've made predictions over the last 4 years, and I think 80 to 90% of them come true, but the 10% doesn't. And that's usually the case, and that's how it works, because we can only make a guesstimate or a decision that's informed with today's data. In 2 to 3 months, we could have a massive geopolitical issue and everything could get thrown out the window. Equally, we could have rate cuts that exceed the 50 basis points. We might get 100 basis points, and that means we see the biggest property boom, even bigger than what we saw in the pandemic. And you might have gotten to the end of this video and said, well, I don't really know what's going to happen next year. And the truth is that happens every single year. I've been investing into real estate for about 11 or 12 years. And what I've seen and noticed every single year, people come with predictions. They say this is going to happen. And sometimes we see it play out and sometimes we don't. We then have the media jump on and say this will happen, and there's volatility. But one thing is for sure, the markets will rise because it's the debasement of currency that it's denominated in. In simple terms, the dollar go down, prices go up for assets. And that's why it's important. You block out the white noise, forget about if markets are going to go up or they're going to go down, know what your emergency buffers look like, have the right strategy, and this is the sort of stuff I talk about in terms of mindset and investment strategy on this channel. So if you have enjoyed videos like this, definitely subscribe and go ahead to the More Than Money podcast channel where you'll find so much more alpha because people there are much smarter than I am. I hope you guys have enjoyed this video. If you have, smash that like button and I'll catch you guys in the next one. Thanks guys.